The investing wizard Warren Buffett will step down from Berkshire Hathaway at the end of the year. One of the world's richest people and most accomplished investors took control of Berkshire Hathaway in 1965. In his 6 decades atop the conglomerate, the Oracle of Omaha made a lot of investments. Here are some of his best and worst investments over the years. Buffett's best. National Indemnity and National Fire and Marine. Purchased in 1967, the company was one of Buffett's first insurance investments. In the insurance division, Berkshire included Geico, General Reinsurance, and several other insurers. And the insurance float provided the capital for many of Berkshire's investments over the years. It actually helped fuel the company's growth. The float totaled $173 billion at the end of the first quarter. As Buffett says, risk comes from not knowing what you are doing. So he clearly knew what he was doing when he purchased stocks of American Express, Coca-Cola Co. and Bank of America. At the time of his purchases, these companies were out of favor because of scandals or market conditions. And did he reap benefits? Most definitely. Collectively, these shares are worth over $100 billion, more than what Buffett had paid for them. And that doesn't count all the dividends he has collected over the years. Apple. Buffett used to say that he doesn't understand tech companies enough to value them and make stock decisions. But in 2016, he started buying Apple shares. He, in fact, bought more than $31 billion worth of shares. And the reason for this bet? Well, he understood that the iPhone maker is a consumer product company with extremely loyal customers. And he was right. The value of his investment grew to more than $174 billion before Buffett started selling Berkshire Hathaway shares. BYD. In 2008, Buffett bet on the Chinese electric vehicle maker BYD. He made this decision on the advice of his late investing partner, Charlie Munger. They bet big on the genius of BYD founder Wang Chanfu with a $232 million investment. And the value of that stake soared to more than $9 billion before Buffett began selling it off. Berkshire's remaining stake in BYD is still worth about $1.8 billion. See's Candy. Buffett has said that this $25 million purchase in 1972 is the turning point in his career. Between 1972 and 2023, See's has generated about $2 billion in cumulative cash flows for Berkshire. Berkshire Hathaway Energy. Utilities provide a large and steady stream of profits for Berkshire. The conglomerate paid $2.1 billion, or about $35.05 per share, for Des Moines-based Mid-American Energy in 2000. It was then renamed and made several acquisitions, including Pacificorp and NV Energy. The utilities, in fact, added more than $3.7 billion to Berkshire's profit in 2024. And now, let's take a look at his bets that didn't pay off. Berkshire Hathaway. In 1962, he purchased Berkshire Hathaway, a troubled textile manufacturing company. He called this his dumbest stock purchase ever. Buffett fought the failing textile business for 20 years before finally giving up. However, interestingly, from 1965, he transformed Berkshire into his primary investment vehicle. Berkshire was used as a holding company for the many businesses and stocks he purchased over the following decades. So these shares that Buffett began buying for $7 and $8 in 1962 are now worth almost $0.8 million. So even his worst investment turned out okay. Dexter Shoe Company. Buffett, in his own words, made an awful blunder by buying Dexter in '93 for $433 million. A mistake made even worse because he used Berkshire stock for the deal. Buffett says he essentially gave away 1.6% of Berkshire for a worthless business. Selling banks too soon. Following the repeated scandals involving Wells Fargo, Buffett started unloading his 500 million shares, many of them for around $30 per share. He also sold off his JP Morgan stake at prices less than $100. Both stocks have more than doubled since then. Blue chip stamps. Buffett and Munger, Berkshire's former vice chairman, took control of Blue Chip in 1970 when the customer rewards program was generating $126 million in sales. But as trading stamps fell out of favor with retailers and consumers, sales steadily declined. In 2006, they totaled a mere of $25,920. However, Buffett and Munger used the float that Blue Chip generated to acquire See's Candy, Wesco Financial and Precision Castparts, which are all steady contributors to Berkshire.